Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It's Tuesday, the 21st day of April, 2015, and this is the daily report for gold and silver. We do have moderately higher prices in the precious metals for all except for palladium. Palladium trading off about $3 on the day, platinum up about $2, gold trading up about $6 on the day. In terms of percentage gains, gold is absolutely leading the way, up almost, or a little bit over, I should say, a 0.5%, 0.52%. Current print on the screen, 1202.37. We look at the low at 93, 1193 even, and the high, we are up near the highs, high being 1203.30 on the day. Silver also trading higher on the day, but only up about 0.25% and well off of the highs of the day. Our current print, as you can see, is roughly 1601, 1602. When we look at the low, that's out around 1589, high 1616. You can see this small green candle relatively closer to the low than the high as we look at silver trading in today's report. We'll look at it in a little bit more detail in just a few minutes. So traders, the fact remains we continue to be in a very, very tight trading range in gold. We have defined support and resistance levels that the market has been trading in and has been doing so pretty much throughout the month of April itself. As we look at this daily chart, there's a couple of things that we talked about yesterday, and I kind of wanted to pick up on those topics. The one thing that we do want to be cognizant of is the fact that we've got a pretty steep resistance line. This resistance line is simply drawn by looking at the lows, the most recent lows, this low and then this low here, this higher low here, and to see if we can either break below it or if the market's going to clip up and move above it. The one thing that we can say, and the one thing that we do see, is that without a shadow of a doubt, we've had this alternating candle color in which it's very difficult to see any kind of direction developing out of it, because if you look here, we've got green, red, green, red, green, red, green, red, and that is just prior to, or just, just in front of the fact that just prior to that, the market did hit this top roughly at 1223 before selling off. As it sold off, of course, it sold off. It first found some tentative support, and you can see that right here at our first level of support, the 38% retracement level, 1192. However, the following day it came and made a new low, but also found support at 1182. So these are really the 2 points that we're looking at in terms of support. However, what we have seen recently is that this lower level hasn't even been questioned, meaning there's been really no attempt to make any kind of lows, and that is actually a little bit on the bullish side, the fact that they're not trying to really take the market down. But there hasn't really been any kind of upside surge either. Now, we have seen really strong support come in the market, and 1192 has been really the point that we have earmarked as really, at this point, pretty critical support. We have seen a break below that, but it just came back up all in the same daily session. But when we look at this market, we can see that these alternating candle colors are really a consolidation period. There's a couple of models that I've been looking at. And then, of course, we have to take into account the fundamentals out within the marketplace itself, because that's what's going to move the market. And the technicals are simply, as I look at it, a way to decipher, make sense of the fundamental information out there. Of course, another way to look at this market is a Japanese average chart, and I've just converted our daily candlestick chart into a Japanese average chart, and you're seeing a lot of the same, meaning this consolidation within the marketplace. Alternating candle color is not as prevalent here, but you're getting these very, very small bodied candles. And so the small bodied candles, of course, are indicative of a market that is at either a pivot point or a confirming point. And what I mean, or a consolidation, excuse me, what I mean by that is what we could easily be looking at, although I'm looking for lower pricing, nothing has really jumped out at us to give us concrete evidence one way or the other. And so one of the other models that's still absolutely alive because of the series of higher highs and higher lows is that we had this rally, we had this dip. We're now in kind of a compression triangle. It will find support, and then if it does in fact and rally, the only sense that it would make would be to take out these highs at 1223. We have been sidelined in the market. And until we have a real clear-cut direction of the marketplace itself, it doesn't make sense to go straight long or short in the market. But there is an alternative strategy, and that strategy is something I'm going to be talking about over the next couple of days, and it's going to be a strategy that involves options, not buying options, but writing options. And here's what I mean. Assume for the time being that this current stagnant sideways trend continues, unable to break below, call it 1182, and unable to really break above 1223 on the high side. But when you look at the most recent activity, it's really at about 1211 or 1213. So one strategy in writing options is to write puts, meaning writing the opportunity for someone else to sell at a set price, but not the obligation, and you would take in premium. So you would write a put with a strike price of 1180, and you would write a call with a strike price of, call it 1215. As long as the market stayed within this defined range here, simply what you would do would be to take in premium. Of course, the risk on this kind of a play is if you do get a hard break either up or down, the writer of an option does have unlimited, theoretically, risk, whereas the option has defined risk. Now, you can deal with that risk by covering that option with a futures contract should the market begin to run into that direction. And the fact that you've taken in premium on both sides gives you quite a bit of wiggle room. And so over the next couple of days, I will present various strategies to go ahead and to put this type of a spread on with particular strike prices and targets and objectives, so that if we see this market continue to track sideways, I do want to show you that there is a way to profit from this linear move that we're seeing in gold. So in terms of the other markets that we do watch closely, we're looking at a weekly chart of the dollar index. You can see we are in an up week. Of course, it's only Tuesday. Now, in terms of the move today, the strengthening dollar itself had a very, very minor effect, only taking away about $1 worth of value. $7 to the buy side, net change $6 on the day as we look at this market. As far as crude oil goes, that is down today. You can see we're at 56.11. We've had some resistance come into the market roughly at 58. We'll have to see if that resistance holds or if it's in a short consolidating period before moving higher. As I said over the last few days, I would not be surprised if the market did begin to backtrack and come back down. But with what is happening currently in Yemen and the fact that we have got naval ships on our way there, that could definitely have an influence on the price of crude oil. So traders, Dow Jones as well as the S&P 500 were down. NASDAQ was up on the day. To oil, even though we've got an up day here, I still see pressure being to the downside. Now, we didn't make a lower low on the day. Certainly looks like we're going to make a lower high on the day. And the market's closing much closer to the low than the high. But just from the vantage point of looking at this, I can see an actual fairly steep decline that this market has been on. Whereas with gold, we have had it maintain a baseline, the baseline being around 1192, pretty much maintaining its point there. At the same time, you've seen silver faltering, these series of lows then a lower low here. So we have had this market really defined to the downside. Even with gold trading sideways, I still see silver as a precious metal that will remain under pressure, and I do believe we'll see lower pricing. Our target right now is anywhere between 15.25 and 15.50. I think that is truly where we will see the price of silver end up over the next couple of weeks. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.